on this one. But the big deal yesterday, of course, is which we reported on, is basically confirmation of the CNBC TV18 news break, is the fact that Restaurants Brand Asia, which is the operator for Burger King, has got a new owner. Is going to get a new owner. We'll have, and of course, there's also United Spirits numbers we want to talk about. Abneesh Roy is with us, Executive Director at Nuvama Institutional Equities. Abneesh, good to have you with us here. How would you read this, and what does it mean for Restaurant Brands Asia? I mean, since it listed, it's never had an up year. I mean, I think the year it listed, it was up. Otherwise, I mean, for the last 4-5 years, it's been just one-way slide. Does it change the trajectory for investors? What would you make of it?
Sure. Good morning and thanks. I'll first take United Spirits and then I'll highlight on the RBA. On the United Spirits, we continue to have a stance more towards staples rather than sin sector. So we have seen in cigarette and liquor the same issue that both central and state governments are going for very high taxation. So United Spirits stock, we expect some more near-term softness, some more near-term correction, because Maharashtra has seen a double-digit decline, and that has led to overall EBITDA and volumes being soft. It's still a decent performance ex of Maharashtra, and Andhra has also come into the base. So this quarter, if you see what has happened, Maharashtra will again remain an issue for at least 2 more quarters. And UK FTA is also delayed because it needs the UK Parliament approval. So long-term story remains good. IPL value unlock is also something which can happen. But near-term, I think United Spirits stock, even in Q4, will see weak number because of Maharashtra. So we continue to prefer Nestle, Marico, Britannia, etc. From a valuation perspective, HUL, Colgate looking good. Coming to RBA, definitely 3 things. It removes the overhang on promoter sale, because the entire promoter, that P stake sale, now that overhang goes away. Fund infusion of 1,500 crore is a positive. Plus, if you see Ajanta Pharma, the promoter group, it's not Ajanta Pharma, the company, the promoters do have presence in that space, so there'll be synergy benefit because they do have Chinese Vogue, Big Bowl, etc., and the Momo company. So there'll be some synergy benefit from supply side and overall understanding. But definitely the 2 structural issues, which I think you also highlighted, that stock hasn't done that well. Those, I think, continues to remain, right? The margin profile is suboptimal. The positioning is again something because the promoters were not that very much involved in the fundamental side, because that stake sale was there. I think now that concern will get addressed, that what is the positioning of Burger King, because clearly McDonald's is there and there are so many other options for consumer. So I will say it's a positive development, but next 1 year we'll see on the transition with the new promoter how that happens. The management churn, what happens in the entire QSR space. We continue to prefer Jubilant Foods, but I think there is a challenge overall in the broader retail space. We like Titan, and QSR will be underweight on the broader perspective.
Yeah, that stock is down 50% in the last 5 years. It was at 120 and now down to 65. So a lot depends on the strategy now of the new management and how they plan to use that fund infusion of 1,500 crore to expand operation. What are your estimates of growth for Restaurants Brand Asia vis-a-vis peers in the QSR space, and how are the valuations?
I think valuation is clearly quite favorable because the stock hasn't done well. If you see in terms of EV to sales, because that I think is a key metric, it's almost 1.5 times kind of multiple EV to sales. Yeah, margin profile and overall profitability has been disappointing because clearly overall positioning strategy was a challenge. So I would say that yes, in the near term, some relief rally can come. But long-term structural issue of margin and positioning, I think that continues to be a monitorable. So we would prefer Jubilant Foods. Yes, near-term, I think the Q3 will see the GST 2.0, that benefit come into place and festival benefit. But in that space, I think Jubilant Foods is the best run company currently. But Burger King and RBA will be more of how the new promoters are able to have the synergy benefit and the positioning and margin challenge, which continues to remain.
Yeah, no, absolutely. So in this space, right? I mean, it's generally a space, the QSR space, which is done very, very poorly across the board. If you look at price performances, anything you'd like to bet on, Abneesh, within the QSR space right now?
Yes, as I said, in the broader retail space, Titan is something which I think looks much more better. In the QSR space, yes, Jubilant Foods is growing faster than most other players. But again, there also, if you see broader challenges, there of too much of competition, right? Now with RBI also seeing fund infusion of 1,500 crores, they will again become aggressive both on discounting and store expansion. So net in QSR space, the competition and the e-commerce, quick commerce kind of a overall space that is providing more options to the consumer. So as of now, yes, Jubilant Foods is the best place, but we'll prefer Titan in the broader retail space.
What's in this Cupid Bazaar style retail deal, Abneesh?
No, we don't cover that company, so we'll not be able to comment.
Is ITC a good buy at current levels?
Currently, yes, valuation comfort is high, and next 2-3 months you will see the price hikes come in 2-3 tranches. The dividend yield is 5%. FMCG is seeing good recovery post the GST cuts, even in paper, the Birla paper business, etc. But issue is currently investors will not see a big trigger in terms of volumes, right? There is a volume decline which is going to happen, and it could be in the range of 5% plus volume decline for the cigarette industry because of such high taxation. So it's more of a valuation 1 to 2 years call you'll have to take. Can there be some bounce back? Yes, that is possible given the sharp correction. But there is the BAT stake sale. We'll continue to monitor the overall FI selling. So we'll continue to prefer growth stocks currently. So Nestle, Britannia, Tata Consumer, Marico are looking better. And even in the staples, other space like HUL and Colgate, we will see recovery in terms of business in Q4 because of the GST transition not being there. ITC more of a 1 to 2 year call someone will have to take.
Abneesh, we leave the conversation here for now. Thank you very much for joining in. 9-10 calls coming in now from our technical expert, Sudarshan.